Global economic news for today. Federal Reserve policy stays restrictive under new leadership. The newly formed Federal Open Market Committee concluded its highly anticipated policy review with a unanimous vote to hold key lending rates steady. Citing persistent caution regarding long-term domestic inflation vectors, the board's official policy statement hints that any potential interest rate adjustments will likely remain completely frozen until late third quarter. G7 summit reaches major milestone on global energy supply. Superpower economic delegations gathered in France have finalized a monumental 14-point memorandum of understanding to halt regional maritime tensions. Both nations have officially pledged to retreat from the strategic Strait of Hormuz, instantly lifting broader risk sentiment as global shipping networks prepare to normalize commercial transit volumes. U.S. consumer resilience triggers retail sales surge. Fresh historical tracking datasets reveal that national retail sales accelerated significantly by 0.9%, substantially outperforming institutional consensus estimates. Economists report that a wave of delayed tax distributions provided a material cash cushion for consumer spending, insulating retail balance sheets despite elevated macroeconomic pressures. Corporate IT spending under intense pressure after Accenture guidance cut. Enterprise technology portfolios are facing severe structural headwinds following a sharp 14% drop in Accenture shares on Wall Street. The professional services bellwether officially narrowed its annual revenue forecasts, sending a major warning signal through the sector that global corporations are actively tightening discretionary software and consulting budgets. Global equity spillover drags down international trading hubs. The technological guidance downgrade has triggered a dramatic immediate ripple effect across major overseas equity indexes. India's benchmark Sensex slumped by over 600 points at closing bells, led almost entirely by a near 6% freefall in the Nifty IT index as systemic enterprise capital fears spread globally. Regional manufacturing metrics post surprise mid-year rebound, providing a stark contrast to broader industrial cooling trends. The June Philadelphia Fed General Business Conditions Index jumped sharply to a positive 10.3. While the abrupt surge in new orders signals localized manufacturing stabilization, the underlying prices paid component climbed aggressively to 53.2, reinforcing core inflation anxieties for corporate supply chains. Crude oil prices witness sharp drop following diplomatic breakthrough. Global commodity desks are aggressively repricing energy contracts as spot and futures markets react directly to the G7 maritime transport developments. West Texas Intermediate and Brent crude futures both recorded steep intraday drops, dramatically easing immediate production overhead projections for international manufacturing and commercial transportation logistics. Bank of England holds line against interest rate adjustments across the Atlantic. The Bank of England's Monetary Policy Committee voted 7-2 to maintain its benchmark interest rate at 3.75%. While two hawkish dissenters pushed heavily for an immediate 25 basis point hike, central bank leadership noted that recent energy corrections are encouraging, though tight labor conditions require sustained stability. Sovereign debt pressures build across emerging market economies. A fresh analytical brief from the World Bank warns that escalating sovereign debt to GDP ratios are triggering severe nonlinear spikes in international borrowing costs. The report emphasizes that rising interest burdens are progressively driving up domestic currency yields, urgently requiring developing nations to implement stronger revenue mobilization frameworks to preserve basic public investment spaces. Safe haven asset markets turn cautious amid geopolitical rebalancing. Domestic and international precious metals markets are flashing distinct signs of investor caution as standard safe haven demand softens. Spot gold and silver prices have neutralized their recent upside trajectories, moving into tight, flat trading bands as institutions wait to see if the newly signed trade and transit treaties achieve permanent structural enforcement. Thank you for your attention.